Good afternoon, everyone. My name is Craig Skog. I'm the President and CEO of Olympia Trust Company here in Calgary. I'm moderating our first panel. We're lucky to have three experts in their requisite fields. For this panel, we have Michael White, the CEO of IBK Capital Corp. They are involved in the mining and metal sector. David Wallach, the president of Triumph Real Estate Investment Fund. He is a resident expert on commercial real estate, particularly well known in the Calgary area. And Arthur Kwan, the CEO of Canada Income Fund, who's very well known and familiar in the cannabis space. So we all know how much the COVID-19 pandemic has rocked our world, and with these challenges has presented some opportunities. So each of these individuals is going to speak to us on what them and their respective firms have seen during these last 8 months here, and opportunities that have presented themselves. So we'll start off with you, Michael. So as I said, IBK does a lot of work in the mines and minerals sector. How has that industry in general fared through COVID-19, and were there any unexpected opportunities that presented themselves?
Sure. Yeah. Thanks, Greg, for the introduction. It's very kind, and happy to be here for the PCMA conference. COVID-19, when it first hit, was very difficult. We likened it, looking back on it, to we suddenly were thrown into triage. And we had to assemble ourselves in a way that we had never had to do before. We had to consider things that we never had to do before in the almost 32 years now. So back at 31 years of history for IBK Capital. For example, we had to lay off some staff almost immediately, which we had never ever done before. We had to work remotely, which we had never done before. It felt like we were, triggering. The pandemic felt like an event that was triggering us to shut down the office and work from home in a way that the office had disappeared or had vanished, and we rapidly tried to put out fires that emerged. We were seeking government assistance. We did everything that we could in order to try and adjust to the new norm, and it felt terrible at points. I mean, you never want to have to temporarily lay anybody off, and to talk to the staff and to have them adjust was very, very difficult. But we managed to do so. Everybody got settled, and everybody was, from a technology perspective, set up at home. And everybody made the adjustment. And it's amazing how quickly, it felt like a long period of time, but looking back, it was a very short period of time. And once that dust settled, and once we could finally get our head above water and breathe, it's amazing the opportunities that emerged. And as you mentioned, we do a lot of work in the mines and metal space. And the first thing that we saw come our way was this rush into hard assets. And most people consider hard assets to be something like real estate, but gold is also one of them, and arguably silver as well. And so with the uncertainty of the world ahead, gold became an asset that people wanted to own. And it wasn't just the physical metal, and it wasn't just the ETFs or index funds. They wanted to own anything that had exposure to silver and gold. And so there was a rush into equities, and that's what we do. Most of what we do is raise capital for our clients, our issuer clients, and many of them are precious metal producers. So we had more opportunity come at us as a result of COVID, which you always think it's a terrible thing to have something good come out of something bad, but because it emphasizes the bad. But it was a blessing to all of us, because the amount of work that we were able to do come the spring and early summer in precious metals was nothing we expected if we were looking back to March and April. And so that was of good relief to all of us, and it's amazing that we sat there and watched. It was amazing to see the money that flooded into the TSX Venture Exchange, by monitoring it by way of the index, and then we had a shift again from that. Once we were saturated, so to speak, with precious metal companies in our portfolio, and our clients and their portfolios. We then had a flurry of activity in the EV metals, and that really came out of left field, because we certainly didn't expect there to be a lot of activity in base metals, and in this case, the metals that go into batteries and metals that go into electric vehicles, because we didn't expect those sectors to have much going for them during a pandemic. Who's going to run out and buy a car during a pandemic? But the opposite was the case. There was just a rush of money into the markets and into these EV producers, and as a result, into all aspects of the inputs into those electric vehicles. And so nickel, cobalt, lithium, they all started to become in favor. And again, as with gold and and silver, we saw that that money wanted to flow into the equities and into the junior equities, as far upstream as exploration for those metals, which was incredible. And it's if you had bought Tesla in 2019, August of 2019, by August 2020, you would have made 10 times on your money. And that's something that we did not expect to see. And that was part of the drive of the demand, I should say, for these metals. So yes, we did, Craig. We saw a lot of opportunity that came out of COVID, and certainly most of it we didn't expect, but we certainly appreciated it.
Thank you very much. Thank you. So, as Michael indicated, metals became sexy again. Prior to that, nothing was sexier than the cannabis industry. It was seemed like it was something novel, and now it's been around in the capital markets for a number of years now. So, Arthur, did the pandemic present any unanticipated opportunities in the cannabis industry, in particular in the private markets? And if so, how did you capitalize on it?
Thanks, Craig. Yeah, first of all, I'd like to thank the PCMA for having us here. And, much to Michael's point, we also saw some unexpected activity in the cannabis sector. As most people know on this conference, it's very much a very volatile sector. And what I can say is a couple of positive news have come out of the pandemic. The first one is cannabis sales. I was reading some statistics by Stats Canada and by the Ontario Cannabis Stores. Cannabis sales have actually increased from January to June, anywhere from 30 to 40%, depending on the province. So, that may be an extension of people staying at home and, bored, figuring out what to do. Or, I think the more likely answer is, with this pandemic and everybody working from home with kids, spouses, etc., it has increased or elevated the anxiety and, the mental strain of a lot of people, and people, certainly more and more people, in my opinion, are looking into, cannabis, whether it's CBD or a hybrid blend with THC to ease that stress. The second sort of unexpected activity, and this is a little bit counterintuitive, but similar to Michael's point, we actually saw increased deal flow, believe it or not, over the lockdown months. And I think with the a lot of cannabis companies are still in the growth phase, and the train doesn't stop. They need to complete the facilities in order to cultivate. They need to supply their stores with inventory. And of course, with the pandemic, the equity and debt capital markets were constrained there. So, for guys like us that provide a private capital to growth companies in the cannabis sector, we certainly had our fair share of unsolicited calls and emails. So we were actually quite busy. And, much like Michael said, I think over the last several months, I became an expert in Zoom, Teams, Skype. I downloaded probably half a dozen, different virtual conference applications on my computer, and that's the and that's the reality of what's happening today. Instead of doing due diligence with a site visit, we had, for example, a potential investee company walk around their facility with a video cam, and we were live streaming it. Another example was, in order to negotiate, potential investments or structuring deals, it's all done over the phone or over the computer now, as opposed to face to face. So, but I find that like Michael and David here, I was very much an office guy, and working from home took some getting used to, but I think I'm getting used to it now. So, and in terms of what we're seeing now in the cannabis sector, I can talk a little bit more down the road here, but we are seeing opportunities outside of Canada. For example, in the U.S. and into Europe, but I'll save that for another conversation.
Thank you very much. So, as Arthur and Michael both mentioned, they've been working from home. I myself did for a number of months, and I'm now coming down to the best place for social distancing in North America, which is downtown Calgary. David, you're a downtown Calgary guy yourself. You're not that far from me right now. So, in the past 3 weeks, Triumph's announced an acquisition, 3 tenants expanding, and 4 new tenants in your portfolio. This is obviously not the message that the media is sending. It's not the reality that a lot of us are seeing. So, how are you actually finding success and expansion opportunities in this type of a marketplace?
Let me use something that analogy you used a few minutes ago when you asked Arthur his question, and you described metals and cannabis as the sexy. I'll describe real estate as the woman you married on September 4th, 1984, and 36 years later, you're still happily married. During that road, you have ups and downs. During that road, you have conversations and you have arguments, but you have to find that way to move forward. And the reason we find success is we decided during the peak of COVID, which was March to June in North America, maybe even July, that our goal is to make sure that all our tenants or majority of the tenants stay in business. And we came with a plan to give them deferred programs on their rents. So we negotiated with the tenants, we negotiated with the banks, and we were daily in touch with our property managers, and they were in touch with our tenants. So what we see right now, because we kept on servicing the properties, because we were kind of in the front line of real estate, what we see now is the payback in a very positive way, whether it's those 3 tenants that you mentioned that we just expanded, new tenants that are coming to our properties because they saw during COVID or after COVID, when everything opened, they saw that those properties were well maintained, well kept. We did some CapEx during the process, for example, to improve HVAC system or to improve the facade. And people tend to go to where they see activity. They want to see that you're active. They want to see that you take the initiative to keep them in business. We, in our portfolio of over 90 tenants, as a result of COVID, we lost 3 tenants out of over 90. By the way, we replaced all of them by now. So it's more about taking this, I would say, if I look at what Albert Einstein said many years ago, he said, life is like riding a bicycle. To keep your balance, you have to move forward. So we kept on moving forward all the time. We had to deal with the issues, but our goal was move forward, move forward, move forward. And that's the message we sent to tenants, that message we sent to our brokers, that message we sent to our property management. We're not standing still. We're moving forward. Whatever it takes, we will make it happen. And that's why we see the fruit right now. It's being active versus being, reactive to other issues. So that's, I think, one of many of the reasons that we now see a positive momentum in our portfolio.
Thank you. So as we've all seen the news seems to be changing daily in terms of COVID. You know, there's lockdowns happening across the country, but then that's contrasted with news of vaccinations. I mean, just yesterday, the Alberta government said that they'll have 700,000 vaccinations here in January. It's a very fluid world that we're living in right now. Despite some things going slower than ever, the potential for change is faster than ever, and drastic change. So I'm wondering, and I'll open this question to the three of you, where do you see your respective sectors going in the next 12 months, with hopefully some news of optimism for the whole world in the next 12 months? What do you think that looks like in opportunities and challenges that may present themselves as a result of things changing, hopefully for the better, in the overall situation?
The challenge we will have, not like Michael and Arthur, we see the opportunities starting to hit real estate only now. They saw it during the peak of COVID. We kind of start seeing the opportunities right now. The challenge we have right now is to raise more money to buy those opportunities. Human beings are social animals. If you just Google Zoom fatigue, COVID fatigue, if you look, the reason why we have again, a surge in numbers of COVID, it's because people want to get together. They go to the pubs and the bars and the restaurants, and they want to be again together with everybody. And I think that is going to be the new future once the vaccine is becoming, I would say, not just 700 out of 4.5 million, but more something that everybody who wants can get it. We will see a surge in office occupancy. We will see companies go back to the office. With all the respect to working from home, I think the best example is the Yahoo 8 years ago. They sent about 25% of their workforce to work from home. 2 years later, they called everybody back. And the reason is very simple. The first 6 months, production went up, and then it was a decline in production. Because if I have to walk my dog at 10:30, but at the same time someone needs me on a call or a conference call or a Zoom or not a Zoom, go into the boardroom and have a discussion, and I'm walking with my dog, or my wife gave me a list to go to Safeway, that doesn't work. So yeah, it's a trend right now. We have only one health, we don't have two health. So we try to keep ourselves healthy, and that's why we need to have the physical distancing, not the social distancing. And that's why we have to keep everything intact. But at the end of the day, once the vaccine becomes, for everybody, available for everybody, we will see everything goes back slowly but surely to what we were before COVID-19. And that's why I see a lot of opportunities to buy now on the real estate, on the commercial real estate, because when those markets go up, we want to sell. It's when you buy, it's not when you sell in our industry.
Well, yeah, you buy low and you sell high, right? That's absolutely what you've got to do. And I do think that there will be some migration back to the way that we worked before. I certainly know that a lot of the property management companies down here, downtown Toronto, certainly hope that that's the case, because the downtown core remains fairly empty in terms of foot traffic and people at the office and people down in the concourse and people moving around. Whereas other areas of Toronto, like Midtown and Uptown, seem to be experiencing some semblance of normal, with schools back in right now and people into their daily lives in terms of shopping and things like that. I understand you're not running out to a bar anytime soon. You're not going to a movie theater anytime soon, but we will return to normal. But or at least some version of what we thought that normal was. But that creates even more opportunity. And I think it was Arthur. I think you touched on it earlier. You said that you've become an expert in all the different Zoom-like platforms, Microsoft, Google, whatever it might be. Well, it's not just that, too. It's the way that we conduct our lives. We're now doing touchless everything, right? Where Internet of Things and 5G was sort of the way of the future, where, my gosh, imagine you could walk into a grocery store and you could pile everything into your bag and just walk out, and it would automatically know exactly what's in your bag, and it would bill your whatever form of payment you wanted to bill automatically. Well, that was more of a sense of convenience in the future. 2 years ago, a year and a half ago, when 5G started to become a reality, and Internet of Things started to play alongside with that now becomes an essential service. Downtown in these buildings, you have to monitor not just the environment anymore, but you got to monitor the people. You got to know where the people are and how they're flowing and what they're doing and where they're congregating and everything else. That's more sensors. Our Zoom calls, this call right now is sucking up capacity in some data center somewhere out there in Microsoft's world. And it's because, and it's also taking bandwidth in terms of the travel of that communication from all of us to all of you out there. And that opens up a lot of opportunity. And so I know we do a lot of work in mining and metals, and there are metals, like I mentioned, with the battery metals and EV metals, which will do quite well because of the way we are changing our behavior here. You also have to look at the technology that supports that infrastructure. And so we've been fortunate to have a long-term client that's in the photonic space, and as an example, POET, and they're helping out data centers, they're helping out the role of 5G and Internet of Things. And on the topic of Internet of Things, we also have a client called Beartech, which is a private company, but they allow communication between sensors and that infrastructure that enables everything that I just talked about in terms of the new smart cities, right? And monitoring of buildings and monitoring of environment and people and tracking people and all that great stuff. So I think that one of the silver linings, to sort of quote my business, silver linings in this COVID is actually we're going to see these what we thought of as futuristic conveniences become a reality faster because people want it and people are more comfortable with it. Arthur, you talked about desktop due diligence and having a video camera go through. I think that's just a great example of the way that we're doing things in mining as well. It's hard to get boots on the ground unless they're local. Well, I'm not local to, say, Nevada right now. I'm in Toronto, and I'm not local to Papua New Guinea. But I can become local through the power of the internet and this type of interaction that we're doing today, as an example.
Yeah.
So I really see there's a lot of opportunity that's going to open up, and metals and mining is just part of it.
I tend to agree with you, Michael. You touch on a good point about essential service. So during this lockdown and pandemic, cannabis retailers were deemed an essential service. So they were open for most of the pandemic. And I'm on the board of a large cannabis retailer with 65 stores across Canada now, and about $140 million in annualized revenue. So they have several stores in Calgary. So, as a bit of a test, I like to pop down into a few different stores just to see how things are going and see the traffic activities. And it's amazing, I never thought that I would see a lineup outside a cannabis store. You would think they were giving it away for free, but the reality is, with the social distancing, they were only allowing, 2 customers in at a time. But I'm happy to say that there was traffic. People were actually venturing out to get their cannabis. And some of the opportunities that I see, David, much like in real estate, sometimes you have a buyer's market or a seller's market. I think in the cannabis investing world, it was very much an investor's market, in the sense that there's more deal flow than capital available. So, for example, our fund currently has 20 investments in it, and we were able to structure a very attractive royalty investment into a CBD company in Nevada. And it was an opportunity that, to be quite honest, we took advantage of. So, the deal has closed and we get a percentage of their top line revenue every month, and we negotiate warrants. So if the company, the private company, if they ever go public or if they ever sell, hopefully that'll trigger our warrants and we'll get some exposure, to the equity upside of that investment. But David, talking about, a seller's market and a buyer's market, you mentioned an opportunity in real estate right now where you're raising funds for, because you haven't seen an opportunity like this in a little while. Is that true?
Well, we see now opportunities that a year or a half or two ago, you had to pay more for the same property. Some of it is, people retire, people don't think that they want to deal with those issues anymore. Different reasons people buy. We never know what the motivation is, but we definitely know, because we have data for 20 some years, that the prices are where we can pay now are way below what we paid for the same property 2 years ago, and definitely before 2007. We kind of collect a lot of data, and that's what we kind of practice, is comparing the data that we had prior to COVID with what's going right now. The other thing is, if you look at historical data on market behaviors, after a recession like we have right now, there's always an uptick in economy activity. So as Michael said, and it's the time to buy right now, and that's why our biggest challenge would be to raise money, because I get on average about 10 to 12 properties a day to analyze. So one comment on what Michael said in terms of the downtown ghost towns. What we have seen, and I have offices here in Edmonton, and we're part of a global consortium called TCN. Most of the local companies are already back in the office. It's the big international and national that have multiple offices that are still at home, and they create a lot of the workforce as well. But they cannot go per office, so they make a decision that encompasses the entire company. That's one of the reasons that some downtowns are vacant compared to suburbia, which is way more active.
So we got about 1 minute left here, guys. Does anybody have a final thought?
Stay healthy.
Stay safe.
Stay happy.
Stay positive. And we have to work twice as hard to get half the results, right? But it's going to change. It's going to change soon, and we don't know the exact date. But there's no other way to look at it other than stay positive and continue doing what you're doing.
Yeah, and I'd add just a shout out to local business. Support your local business, right? As much as you can. It's use it or lose it, and some of them have been around for so long, and it'd be a shame to see them leave. So yeah,
100% agree.
And support the PCMA too, because we need it too.
support your association. Absolutely, you got to do that in spades. So yeah, we're proud to be a sponsor, of course, and always support the PCMA.
Thank you guys all for your insight, and we're lucky to have this conversation. Take care.
Thank you so much, Greg.